Decoding the CEO's message. MOHAMMED Al JEFAIRI'S video addresses the elephant in every Sidra community chat: price expectations. But here's what most viewers missed while focusing on numbers: his emphasis on mechanism over speculation. At the 0.22 mark, Al Jefairi doesn't promise moonshots or guarantee returns. Instead, he focuses on price discovery through natural market dynamics rather than artificial pumps. This might disappoint those expecting launch day fireworks, but it reveals something more valuable: a team that understands sustainable tokenomics versus Ponzi mechanics. Let me break down why this matters. Projects that hype specific price targets before establishing real utility typically follow a pattern: massive launch spike driven by FOMO, immediate dump as early allocations exit, followed by slow death as the community realizes there's no foundation beneath the valuation. Al Jefairi's approach suggests awareness of this trap. The 506 section, where he dives into Sidra Coin price analysis, provides the actual substance. He's not pitching dreams. He's outlining factors that influence valuation: adoption metrics, banking integration progress, regulatory compliance milestones, and ecosystem development. These aren't sexy talking points, but they're the variables that determine whether a token maintains value 6 months post-launch. Here's the critical insight. Al Jefairi positions Sidra Coin as functional currency within a banking ecosystem, rather than speculative asset-chasing retail gambling. If Sidra Bank actually delivers on its infrastructure promises, SDA becomes necessary for platform operations, transactions, savings mechanisms, lending protocols. That's utility-driven demand, not hype-driven pumps. But, and this is where critical thinking separates profitable investors from exit liquidity, we need to evaluate whether Sidra Bank can execute on these promises. Banking infrastructure isn't built overnight, and blockchain banking faces regulatory hurdles that have buried projects with bigger budgets and more experienced teams. Sidra Bank's infrastructure reality check. Let's examine Sidra Bank's actual progress versus promotional claims. The banking platform promises to merge traditional financial services with blockchain efficiency, a vision that sounds revolutionary until you study how many similar projects failed to launch. What distinguishes Sidra Bank from vaporware? 3 measurable factors: regulatory compliance documentation, technical development milestones, and partnership verification. Al Jefairi's video references ongoing development. But smart investors don't trust promises, they verify progress. The official website reveals roadmap phases: KYC integration, fiat on-ramps, savings products, lending mechanisms, and cross-border payment solutions. Each phase represents technical and regulatory challenges that typically take 18 to 24 months minimum to execute properly. The question becomes, is Sidra Bank's timeline realistic or optimistic? Here's where research separates speculation from informed positioning. Projects that succeed in blockchain banking share common characteristics: established legal entities in crypto-friendly jurisdictions, licensed financial partnerships, transparent team credentials, and public code repositories demonstrating actual development rather than marketing campaigns. I've reviewed Sidra Bank's available documentation, and there are both encouraging signals and concerning gaps. Encouraging: they're discussing regulatory compliance proactively, rather than ignoring it like projects that inevitably face government shutdowns. Concerning: limited transparency around specific banking licenses, partnership details, and technical architecture that would allow independent verification. This doesn't mean Sidra Bank is fraudulent. It means they're still in early stages where promises outnumber deliverables. For investors, this creates a risk-reward calculation. Enter early accepting higher risk for potentially higher returns, or wait for proof of execution, accepting you'll miss early positioning if they succeed. If this level of critical analysis is revealing factors you haven't considered, you need to smash that like button immediately and subscribe to TJ Crypto World. I publish these deep dive investigations daily because the crypto space is flooded with promotional content disguised as education. Your engagement tells me you're ready for analysis that protects your capital while identifying legitimate opportunities. We're not here to shill projects, we're here to evaluate them. Now, let's address the most important question. What should Sidra holders actually do right now? Strategic positioning for Sidra Coin. Here's the positioning framework that applies to Sidra Coin and every early-stage token launch. Risk segmentation based on information availability. For Sidra, we're dealing with three distinct scenarios. Scenario 1, Sidra Bank executes on infrastructure promises, achieves regulatory compliance, and launches functional banking services. In this outcome, early SDA holders benefit from utility-driven demand as the platform gains users. This is the bullish case that justifies current community enthusiasm. Scenario 2, Sidra Bank faces regulatory delays, technical challenges, or partnership failures that extend timelines significantly. Token launches, but utility remains theoretical, while infrastructure develops. In this outcome, price discovery becomes speculative rather than fundamental. Exactly the volatility trap that destroys retail positions. Scenario 3. Sidra Bank fails to deliver core promises, whether due to regulatory rejection, technical incompetence, or intentional deception. Token becomes worthless, along with countless other projects that never progress beyond promotional phases. Your position sizing should reflect these probabilities. If you're holding SDA mined through their ecosystem, your cost basis is time rather than capital. You can afford to hold through uncertainty. If you're considering purchasing positions, you need to answer honestly, am I investing based on verified progress or speculative hope? Al Jefairi'S transparency about price dynamics actually helps this calculation. By avoiding hype-driven promises, he's setting expectations for slower, steadier growth, assuming execution succeeds. This won't satisfy those chasing 100x overnight, but it protects the project from pump and dump dynamics that destroy long-term viability. The smart play? Monitor specific milestones rather than price action. Watch for official banking licenses in recognized jurisdictions, verified partnerships with established financial institutions, public beta launches of platform features, and independent security audits of smart contracts. These indicators reveal actual progress versus marketing theater. If Sidra Bank starts checking these boxes, confidence increases proportionally. If months pass with only announcements and no verifiable progress, risk increases regardless of community enthusiasm. This is how professional investors evaluate early-stage blockchain projects. Execution evidence, not social media sentiment. The warning signs to watch. Before we wrap, let's address red flags that would immediately change this risk assessment. First, any pivot away from regulatory compliance. If Sidra Bank suddenly operates through unregulated jurisdictions or avoids licensing requirements, that signals they can't meet legitimate banking standards. Second, team anonymity or credential inflation. Banking infrastructure requires expertise in financial regulation, blockchain architecture, and cybersecurity. If team backgrounds don't support these requirements, the project lacks capability to execute. Third, continuous delays without transparent explanations. Every project faces challenges, but legitimate teams communicate setbacks honestly. Repeated postponements with vague justifications suggest problems they're hiding rather than solving. Fourth, pressure tactics encouraging investment before verification. If community managers or promotional content create urgency around buying SDA before missing out, that's manipulation rather than education. Legitimate projects let their progress speak rather than pressuring retail participation. MOHAMMED Al JEFAIRI'S measured approach in his recent video actually works in Sidra's favor here. By focusing on mechanism over hype, he's demonstrating leadership that prioritizes sustainable development. Whether his team can deliver remains the critical unknown. Call to action Nerd 2, 10/45/11/15. Before we close this analysis, make sure you're subscribed with notifications activated. I'm publishing a follow-up investigation titled 5 Banking Blockchain Projects, Which Will Survive 2025, that directly complements today's Sidra breakdown. That video reveals how to evaluate blockchain banking infrastructure and identify which projects have actual execution capability versus marketing budgets. Don't let timing cost you positioning advantages. Subscribe now so you're positioned before momentum shifts. I genuinely appreciate each of you investing your time in this critical analysis. Your engagement and intelligent questions in the comments push me to deliver research that goes beyond surface-level repetition. Remember, in crypto, Protecting capital matters more than chasing every potential moonshot. Sidra Coin represents an interesting opportunity if execution matches promises, but it requires monitoring specific milestones rather than trusting promotional content. This is TJ from TJ Crypto World, reminding you that sustainable wealth comes from evaluating projects through evidence rather than enthusiasm. Keep researching, keep questioning official narratives, and I'll see you in the next investigation where we continue separating legitimate blockchain innovation from elaborate marketing campaigns.